Hello and welcome to today's video. Today I will be speaking about two other companies from healthcare list, from my watch list. Why I will be speaking about them? Because earnings are getting closer and I think it's a good idea to refresh ourselves with latest highlights related to Humana and UnitedHealthcare Group. And those companies are on fire last couple of months, and hopefully when you will be watching this video they will be also continue to be on fire. So without further ado, let's start. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. I will start with Humana for the beginning. So stock is up 50% from July lows. It was up because the latest earnings were less bad than expected. Benefit ratio was around 90% in correspondence with rest of its peers. EPS was revised down while adjusted EPS was revised up. So it was revised down to $13.77 from previous estimate of $14.68, while EPS guidance was revised up to $17 from previous guidance of $16.25. For annual benefit ratio, guidance is now in the range of 19.1% to 90.5%. Also, another positive thing, the bad thing is that they anticipate a decline of the members, but the good thing is that they anticipate decline which is less than previous estimate. To be exact, 500k compared to the previous guidance of 550k. And partially this is thanks to Center Well Service, which now expects a net patient growth in the range of 50 to 70k. Next, what we can see here is a graphical showcase of the margins for Humana compared to its peers, and this is one thing why I think Humana is not so good compared to the rest of its peers, even though it's still on the fire. First, margins are under pressure because of the elevated Medicaid cost within this sector in general, but we can see that companies like Elevance and Cigna, for example, when speaking about operating margin, are having better margins compared to Humana. Also, the same story goes for net margins and return on equity margins. And another challenge that this company had was related to its star ratings. After it has suffered setback in regards to their star rating, they stated that they don't expect to return to 4-star rating till 2028. This is bad, as higher ratings means more government fiscal support for packages, but recent positive developments upon leak of the news said that they now expect to have 20% of its members currently enrolled in plans rated 4 stars and above for 2026 with an average star rating of 3.61, which is consistent with the company's 2025 average star rating. The company also expects 14% of members in 4.5 star plans for 2026, up from only 3% in 2025. So we can see that now the expectations are better compared to the previous news, and because of this, this is one of the main reasons why the stock company has been rallying so hard in the recent weeks. Now I'm switching to the UNH. So first, to revise their latest earnings, they now expect full year 2025 revenue outlook to be in the range of 445.5 billion to 448 billion. Full year 2025 earnings outlook will be of at least $14.65 per share, and adjusted earnings per share will be at least $16 per share. Second quarter earnings were $3.74, while adjusted earnings were $4.08. My feeling from their latest earnings call was like they wanted to make expectations as minimum as possible, so that when they announce their future guidance for 2026, they have easier goals to set. One thing that is positive from their report is that they are still having strong user growth across their verticals. For example, compared to 2024, they are now serving up to 1.1 million more customers. Even though there will be some declines in specific areas, in general, they, for the second quarter of 2025, had an increase of 770k of new customers year to date. Another positive aspect is that they increased dividend by 5%, and benefit ratio is expected to be on 89.25 points plus or minus 25 basis points on annual basis. Higher medical costs are still a thing, so they are currently having in 2025 medical advantage offerings elevated at 7.5%, while their expectations at the beginning of the year was just 5%. Now for 2026 they anticipate these trends to continue to accelerate meaningfully to nearly 10%. So we can see that elevated margin cost will still be a thing in the future. But another positive thing is that Trump and Republicans are now open to talk with Democrats on healthcare to reopen government, so that means there may be some positive developments in the making from this standpoint, which could at the end of the day strike some kind of a good deal for healthcare companies. And now to finish the story, we will go a little bit to the technical analysis. So here we can see that UNH is well on its way to reclaim 200 moving average at $400. The question will be if the price action can turn the zone into support before next leg higher. Daily RCI is at overbought levels. Some consolidation might be needed, but then again, if some strong catalyst emerge, it could act as a strong signal for continuation of a move. For example, if some kind of a good deal is struck between US government, Republicans and Democrats. Now to go to the Humana. Humana is a different story, as it's already reclaimed its 200 moving average and it sold off below it for short period, which corresponded to 0.618 Fibonacci level. Now it have rebounded strongly once again and it has turned 200 moving average to support, and now we are waiting to see if it can switch $320 level to support. And lastly, Elevance Health. I didn't discuss its fundamentals here as I already made video for them. Link should appear on the upper right corner for those interested in. From technical standpoint, it is approaching 200 moving average at $370. Historically, it acted as a strong support and now it flipped to resistance, so we need to see if it can flip it to support before new leg up. Okay, this would be everything for today's video. You can, if you're interested more into reading these kinds of topics and more deep dives, you can check my Substack. You can check and subscribe for daily updates and market insights on my X account, and for educational content you can check my website. Links for Substack, X account and website will be in description of this video. So this is it. Hopefully you like the video. If you like the video, subscribe and like as a sign of support. It really means a lot. And nothing. See you in the next video. Bye.